Well, Australia's unemployment rate today came in steady at 4.1% for May. Around 2,000 jobs were lost during the month. Almost all of them were part-time. Now, this plays into the Reserve Bank's future interest rate decisions. Of course, Paul Bloxham, the chief economist with HSBC here in Australia and a former Reserve Bank economist. Paul, just take me through some of this. Do we look straight through this? The Reserve Bank looks through this? There's almost nothing to see here, is there? It's low, it's strong, and it's ongoing, but it's not causing wages inflation.
Oh, I think that's right. I think the main thing to focus on is the unemployment rate, and the unemployment rate is steady at 4.1%, which is quite a low rate in a sort of historical perspective. It's now been broadly steady for the past 15 months, so it's been tracking sideways. So if you want to get caught up in that employment number, you know, it went up a lot in the last couple of months after having fallen in February, and today's number was sort of just below flat. I don't think that's the main focus. I think the main focus is the unemployment rate's tracking sideways. The labour market's still actually fairly tight.
OK, so can I ask you an economic riddle here, right? So the economy is flatlining right now. It's tracking along just a little bit above zero. So we're not in recession, but we're just blur at the moment. That's how I describe the economy. And yet what you've got is an unemployment rate that's also steady, 4.1%. So it's very, very strong. And yet we reported earlier that more than 400,000, the population has increased by more than 400,000, which says that most people who came to Australia found a job, which would suggest that the jobs market is actually stronger than maybe even the unemployment rate suggests.
So what squares it all the way is that productivity is falling, right? So you've got more people, which gives you more growth in the economy. You're creating jobs for those people, which is keeping the unemployment rate steady. But the jobs that they're doing is creating less output.
So
right?
in other words, there's more people doing the same thing.
Well, we've got more people employed, but we've got falling output. We've got less output for that growth. So productivity squares the circle, which is to say output per hour worked. So for every hour we put into the economy, we're getting less output right now than we were a year ago. And that on the last stat that we got for that, the first quarter print for GDP, output per hour worked is falling by 1%. We employ, if we put in the same hours now that we did a year ago, we get 1% less output, and that is not a good situation.
So, okay,
that's the productivity challenge.
So what is the end result of that? Is it that at some point unemployment rises, or at some point you've got to do something to try and fix productivity, which the Treasurer, of course, announced yesterday, to great fanfare, they're going to do when they have their roundtable coming up in the next month or so?
Well, what we think is going to happen is the unemployment rate is going to keep tracking sideways, because a lot of the job creation that's been going on has been non-market jobs. It's been by the public sector, and we think that's...
So in other words, it's the government that's actually employed all the people.
It's government money.
Government related.
So a lot of it is the care economy. A lot of it's in aged care. A lot of it's in the disability insurance scheme. A lot of it's in healthcare.
So it's not to say that those jobs are not important. You're not saying that. The reality is it's actually not powering the Australian economy. It's caring for parts of Australia's economy.
So there's a few things in that mix. I mean, the first thing is we don't measure productivity for those jobs particularly well. So there's a question around how much we're capturing it. The second thing is, yes, on average, productivity in those areas of the economy tends to be lower. So if you put more of those sorts of things into the economy, you get lower productivity mechanically. The challenge here, of course, is that's been the big driving force for employment growth. It's driving a lot of GDP. In fact, 80% of the growth in the economy over the past 2 years has been public demand, and 76% of the jobs growth over the past 2 years has been these jobs in that sector. So
that does not spell to me a healthy economy, because that's not one that's being driven forward, because somebody has to pay for those services and for those jobs in that care economy.
That's right. So what we need is the private sector to start to revive and to recover. And in fact, that's a part of what the government's talking about, needing to have to try and find a way to make that happen. Public demand to slow down, private sector to pick up. Now, the question is, how do you get the private sector to pick up?
Well, you make them more competitive. You actually give them cheaper energy prices. You give them cheaper taxes, and you give them lower wages, all things of which the Labor government won't do.
So I'm asking the questions now, it turns out. But absolutely, this is the agenda, right? So I think, part of it's going to be helped along by interest rates coming down a bit. There's no denying that. Yes. That gives us a bit of a cyclical lift in the economy. But how fast can we grow? Not as fast as we used to, unless we lift productivity. economy unless we focus on those things: competition, tax reform, the regulatory environment, all the things that will help to stimulate the private sector to get more involved, to start investing, to do more hiring, private sector hiring, to get more activity in the economy. And of course, that is now a big agenda for the government, as it should be. And that's what we need to focus on. If we don't get that right, we don't lift income growth on a per capita basis, we don't lift living standards in the medium term, and it gets more difficult to fund.
And there's the bottom line of all of this. If you don't have the private sector creating wealth, which pays for all of those public sector related jobs, then what you have is you have over time living standards go down. And we're vulnerable to shock.
That's right. And we can look back to the recent history and say that's exactly where we are right now. So per capita GDP, so if we strip out the population, which has been strong, as you pointed out, 1.7% growth over last year, that's down from 2.4 the previous year. Strong population growth has been the key driver of the economy. If you were to divide GDP by the number of people, per capita GDP per person has been falling for 9 of the last 11 quarters. That is not a particularly healthy state for the economy. So yes, productivity has to be the primary focus at this point.
There's one other thing you could do. You could rewrite the way the productivity is actually measured if you were the government, couldn't you?
Well, I think you need to do your best to measure productivity, and it's not easy. There's really no easy way to measure it. But we've got measures that tell us pretty convincingly it's been falling for the past couple of years. It's no higher now than it was in 2016. That is a structural challenge.
I'll tell you what, Paul Bloxham, it is always great to have you on the program. Thanks for being here today with us.
Thank you.